You have until June 1st for what could possibly be the biggest world-altering event of your lifetime. The stakes are high. The whole world is relying on this one event to be successful, but if they fail, you will pay a heavy price. The clock is ticking, you are running out of time, so you need to listen up and start preparing this very second. So what is this event? How did we get here? And how does it all end even if they are successful on June 1st? Let the story begin. Well, June 1st is the day the US Treasury goes broke. And are we thinking, oh, we've heard this song and dance all along about the US going to default on June 1st and miss their payments? But people, there is something much bigger going on. And in this video, I'm going to go over the bigger picture of how this really happens, how the US government is going to default, how there is no way for them to repay the debt, and the massive, massive consequences this is going to have for all of us. Because did you know right now that the US Treasury is already at the debt ceiling? And this means the US Treasury has no legal authority to issue new debt. Now, there is a technical way it can issue new debt. That is if the current debt matures, and then once the maturing debt goes off its books, then it can issue new debt. But there's a very big problem with this. The problem is the US government is already running on a $2 trillion deficit, and it's not enough to just let the current debt roll over. Because what they have to do is they have to issue new debt to keep the deficit going, and that's where the debt ceiling bites. So I'm sure what you're wanting to know is, how is the US government paying its bills without issuing new debt? Well, they're playing shell games, people, and they're playing fast and loose. Now, there is also some other slush funds that the US Treasury has with some money lying around, like the Exchange Stabilization Fund worth about $100 billion. And it's quite interesting how this fund was created. Did you know the Exchange Stabilization Fund was actually founded in 1934 when the US government confiscated people's gold at $20 per ounce and then revalued it at $35 an ounce. It has been used numerous times, including the 1994 Mexican bailout, which Congress refused to approve. But did you know the Exchange Stabilization Fund actually has no congressional oversight? But more recently, this fund was used to bail out Silicon Valley Bank, bail out big billionaires and political donors, and also politicians as well. But eventually the cash flow from tax collections and also these slush funds will run out of juice. And that's happening June 1st. Now, of course, you may be thinking, like even I thought, this is just all political theater, and of course they'll raise the debt limit and there's going to be no consequences. But while most people aren't taking this very, very seriously, JP Morgan is convening a war room, and they're preparing and they're looking at all angles what's going to happen if the unthinkable of the US government defaulting will mean on the financial system. JP Morgan has recently convened a war room that will soon be meeting 3 times per day to deal with the fallout of June 1st and the possibility of the US missing principal and interest payments on US government securities, or possibly skimping on social security payments or other entitlements. Now, if this does happen, there will be massive, massive consequences. For example, if they don't pay interest on their US securities, while the US government credit score, their credit rating is going to be downgraded, and it's going to be much, much harder and more expensive for the US government to issue new debt. This also means bond prices will plummet. People will start to lose faith in the US government, and all this system of the US government debt monetary system relies on trust. The US dollar will lose value rapidly, massively increasing inflation right when social security and all other benefits to the most vulnerable get wiped out. So JP Morgan is obviously taking this date very seriously, even if investors aren't. But you need to look at the bigger picture, people. Even if they do not default on June 1st, it is inevitable when you do the numbers, when you do the math, the US government will default eventually. And you should at least be prepared for the market turmoil that could arise if it comes down to the wire. But of course, this is all just short-term thinking. Let's zoom out and figure out how long can this debt-based system keep going? Because let me show you one chart that will bring the downfall of the US government and of the US dollar. So look at this. The US debt to GDP ratio is basically at its highest level, 120%, with the exception of the immediate aftermath of the Second World War. At least in 1945, the US had won the war and our economy dominated world output and production. And today the US government has debt, but without the global dominance it had in 1945. So the US government was always happy to take on more and more debt, and very uncomfortable debt during times of war. But right now, the US really isn't in an official war with anybody right now. but debt is at all-time highs. But what they did in 1945 is after the war, they brought the debt down rapidly. So even though geopolitical tensions are rising, the US does not have a war comparable to World War II, but the debt keeps rising. So the debt has always increased and decreased throughout history, but there's never actually been a time where people thought deficits don't matter. As long as you hold world reserve currency status, you can just keep on printing your money to infinity and there's no limit. Well, people, newsflash, when you study history, when you study empires, there is always a limit, and the US government has passed that limit. Because did you know it took 193 years for the US government to take on $1 trillion in debt, and right now we're doing this every 6 months. And these days it doesn't matter what political party you're associated with, everybody wants to spend and spend big. But the question, exactly how much debt to GDP is too much? And when you've looked at history, like I said, and looked at other empires, what is the danger zone for debt to GDP? Because a recent great example is Japan. Now, economists Ken Rogoff and Carmen Reinhardt carried out a long historical survey going back 800 years, looking at individual countries or empires in some cases that have gone broke or defaulted on their debt. So what exactly is that danger zone? Well, that's a debt to GDP of 90%. They found once debt to GDP hits 90%, that means the amount of debt to the amount the country produces is 90%, the country takes a massive turning point. At that point, a dollar of debt doesn't mean a dollar of output, and debt actually starts to become a drag on the economy, especially during a time when interest rates are going up, which is what we're in right now. So if we know we're in the danger zone right now, what does this mean could happen? Well, this means we're becoming more and more like Japan, where we're going to experience a lost decade or even decades. And that means, like other countries and other empires have faced, we're going to be facing a sovereign debt crisis in one way or another. When you do the math, it's just simply inevitable. And guess what, people? The world knows this is going to happen. Other countries know this is going to happen, and they're preparing, and they're preparing at an alarming rate. We're seeing the rise of the BRICS nations. We're seeing the rise of the East. We're seeing other countries trying to find other ways to trade without the use of the dollar. We're seeing countries like Saudi Arabia that's been very friendly with the US and had great relationships with the US. They're now trying to find ways to sell oil in other currencies like the yuan. These new leaders of these BRICS nations, they want to change. There's a fight now for global supremacy, and there's a saying, there is decades where nothing happens, and there are days where decades happen. So again, people, I beg you, you need to prepare. Even if the US government doesn't default on June 1st, it will happen eventually. So how exactly can you do this? Well, it's very, very simple, everyone. You need to find other means of exchange besides US dollars. For example, it does not matter what currency there's been, what fiat currency there's ever been throughout history. They've all failed. But what has stood the test of time? Gold and silver. So if you own gold and silver, it won't matter what happens to the US dollar. Also, there is a new currency arising, a new way to get out of the financial system, and that is Bitcoin. Now, I know a lot of gold and silver people hate Bitcoin, and a lot of Bitcoin people hate gold and silver, but they can work together. If you need to flee the US, if a global conflict runs out, and you need to take money out quickly out of the country, it'll be very hard to take out $200,000 worth of gold out of the country, but you can memorize your private key with Bitcoin. You can also have it in cold storage, and you can leave the country, go through the airport, cross borders with hundreds of thousands, even billions of dollars worth of Bitcoin. And you need a plan B, because if the US government does default on its debt, if we do face a big depression, it could get very, very bad in the US. So what I've actually been doing, this is actually kind of out of the box. You need to think of what could another country I go to if things really hit the fan, or at least get out of the city. But everyone, what do you think about all of this? Do you think the US government default is inevitable? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.